If you're a residential real estate agent earning $200,000 a year and you want to grow your passive income, this show's for you. Learn the secrets other agents use and hear from experts in our field in order to guide you along your journey to investing in assets like apartment communities so that you can turn your commissions into cash flow. I'm Randall McLeod. Let's go, baby. All right, welcome back, agents. Great to have you on today. I am chatting with a business consultant today. His name is Eric Kneller, and I wanted to bring him on so that we could talk about some of the strategies that business owners can implement and use to cut down on some of their tax bill, things to keep in mind when you're hiring W-2 specifically employees, and just talk to him in general about some investments and things that he's working on as well. So again, his name is Eric Kneller. He is known as the Prophet of Profit. And he has the Profit Mastery Blueprint. So check in the show notes for some of his contact information if you guys want to reach out. And without further ado, let's jump in. Eric, the Prophet of Profit. I love that, man. That's awesome. So welcome to the show, man. It's good to have you on. Thanks for joining me. Why don't you go ahead and just give us a quick overview of your business, like the elevator pitch and kind of what you're doing and what you're working on.
Sure. So my target audience is really vertical agnostic, but it started out with size of business. It's small to mid-size in that, say, 5 to 99 employee space. It's expanded somewhat recently, but the whole idea there is to serve that underserved market. There's a lot of tax advantages and other operating cost reductions that larger companies take advantage of because they have internal means to do that, or they have service providers that serve those larger numbers. But where I come in is that sweet spot to be able to help those folks slash taxes and double their profits. And bringing together a couple of different service providers and verticals that fit within their business, I can look across that. And that's why, the profit of profit thing is I can look really quickly at a scenario and give an idea of what the benefit can be. Okay,
awesome. So let's pull on that thread then. So you were talking to a real estate broker, right? And an investor. So I do both. And a lot of listeners, exact same scenario, right? We're in the real estate game. We're bouncing around doing some things. So what are some strategies that you have seen that I may not know about?
Well, straight out of the gate, depending upon whether or not you are growing an organization and leveraging actually hiring W-2s. So if that is something that your business needs to do, then you need to take advantage of the work opportunity tax credit. So if I say, who do you know who's hiring? Almost every hand goes up, right? Because everybody's looking. I don't care if it's to add 1, 2, or 10, or you have massive turnover, whatever it is. So not for 1099s or contracted agents, but just on the way in the door, being able to take advantage of that program. It's been around since 1944, but 9 out of 10 businesses don't even know about it or take advantage of it.
Okay. So what is that? I'm going to hire an admin, right? I need an admin, W-2, they're coming in.
Yeah.
They perfect. Know when they're working, they're 40 hours or whatever, right? So what does that even do? I don't even know.
So what that does is it was put in place in 1944 to help incentivize businesses to hire veterans. So government created a credit that said, we want to help the veterans get back into the workforce. So we're going to give you this tax credit. Well, in the early 2000s, it became a job creation boom. So they tacked in, there's 12 or 15 different categories. Veterans still hold several of them, but there can be things like somebody coming back off of government assistance, as an example. There's some youth ones. It's these categories of folks that they would say considered more disenfranchised or harder to get employment. And they're going to say to the business, if you hire somebody that fits into this category, that for the first year, if they work a certain number of hours, partial credit's 120, full credit's 400 hours, we're going to give you this dollar for dollar tax credit, and it's going to be between $900 and $9,600 with an average of $2,400. But there's a lot of stipulations and mechanics to it.
Is that annualized?
Like first year.
Okay.
First year. So this is why people miss it, because you have to have the prospective employee surveyed and identified that would fit into that category on or before the day of hire. So historically, it's been a clunky process because it's supposed to be confidential questions you're asking that they would identify to fit into one of these categories. It's not so hard when it's a veteran, but there's other ones like returning felons. There's just different categories that fit in that people would have a harder time getting a job. Well, if you're going to hand somebody a piece of paper and say, fill this out as confidential, hand it back, and then I'll see what I'm going to do with it, the compliance goes way down. So having a system in place to do that, one of our back office offerings is to give the business a way to be able to go ahead and survey those employees on the way in, and then handle all the paperwork, because there's certain deadlines you have to meet. You have to get the documents in 28 days. You have to track the hours and then turn in the forms. So that's why most people miss it. And the big companies that service large companies for this, they say, well, if you hire 1,000 or more employees a year, we've got a service for you. The small to mid-sized people were left out, but that's one of the things that we can do is come in and help them make sure everyone should take advantage of that.
When does that even, to me, hearing how involved it is to do that, like I can't imagine doing that, to hire a one-off assistant who's making 36,000 a year, whatever that number is.
Yeah.
Like, when does that actually make sense to do? Because if I'm only getting a $2,500 credit, go ahead. You can answer that because.
Yeah. Well, it's just, I'm not, and this isn't a pitch, but it's using the software to basically have the potential employee hit a link, fill out a survey, and then somebody else does all the work.
Yeah. Yeah. And so are those people vetted or from you guys early, and then you filter them into somebody, like, I'm looking for somebody and you're like, hey, these are already pre-vetted, these guys?
Oh no, it would be from the employer perspective, it would be anybody that showed up for the job interview. You could send them the link and they answer the question. So that's the only extra step for the business to do, basically, is, hey, this is part of our application process, fill this survey out, it's confidential. And then if you happen to choose that person, let's say you had 3 equal candidates, but one of them happened to fit into a veterans category that gave the business $9,600 tax credit, and they were the best fit for the job. Bonus. Yeah,
for sure. Okay. Got it. Yeah. I was just kind of curious again on that. It seems like there would be a sweet spot, just like you said, 5 to 99 in revenue or something like that.
Yeah. If you're looking at different verticals, places it really fits well in, restaurants, manufacturing, long-term care and healthcare kind of areas where there's a lot of turnover and a high percentage of people fit into one of the categories. I've seen as much as 40 or 50% of employees that come in qualify for a credit. So then it starts to really stack up.
Yeah, that makes sense. So we were talking about, was this the early on, I'm on your site, it says claim 200,000 specialized tax incentives. Is that kind of up that alley? That
would be a smaller portion of it, but it can be larger for large companies. But there's other incentives, and let's bring it in real. Maybe you have somebody doing this for all properties already, but if you're buying and holding and not going to get rid of a property for at least 2 years, I hope everybody's doing cost segregation studies and making sure that they're pulling those taxes, forward. So in that space, that's probably the thing that everybody's already checking that box off. Maybe, maybe not. Most accounting firms, if they list it on their space, they're still outsourcing the process because it's based on an engineered study and they don't do it in-house. Yeah. So that can move money forward really quick depending upon the size of the property investment. So that's one portion of it when it comes to property that is easy to go after.
Yeah, the cost seg, I mean, we dive into that quite a bit on an episode or two, just because it's such a big thing, especially when we're talking, large commercial multifamily style properties.
Yeah,
I know it works on the smaller ones and small multis and even single families, but there's like a cost barrier at some point. It makes sense to do. But just anyone listening who doesn't know what a cost segregation is, typically when you buy property, the engineer, the cost segregation company, is going to go out. They're going to say, that's a fridge, that's, personal property. So all the personal property and different types of classes of the depreciation schedule, they get advanced up to year 1, correct? Am I saying this the right way?
Yeah. In different buckets. Yeah.
Yeah. In different buckets. So you can take all the depreciation for certain items earlier in the depreciation cycle. So anyway, just want to high level that since that was brought up. So then again, talking, I guess, specifically some of the strategies that you work with other than the two that you just mentioned, like what are some other things that real estate professionals may be able to do if you're looking at their business to increase their profitability? Because
making sure that everyone's got and I know some in the space already, I'm working with some that have done it, but right hot and heavy right now for the next few months is going to be the employee retention credit. So ERC or ERTC for employees that you carried all the way through from, say, 2019 through the end of 2021. It's a refund on payroll taxes paid. So everyone that has an LLC has probably gotten a voicemail drop this week or two about it. But That is something that is real. The questions come up. The IRS put information out that said, it's on his top 12 list of watch out type of things, because there are scammers running around and buy it. But done properly, it's a refund on payroll taxes paid up to $26,000 per full-time W-2 employee. And everybody needs to make sure that they get that taken care of. So get in line to get that credit, because it is a real one.
Okay. Yeah. I mean, I looked it up because I'm getting at least 3 a day voicemails. And then I saw that notice that you just mentioned. They're like, this could be a scam. It's a real thing. It actually does exist, but there are a lot of people. It does
exist. I'm helping clients get millions of dollars back on that. But more importantly, I look at what the next wave. I started looking at that mid last year and saying, what's after that? Because now it's like if you've ever been to an event and I would say it would be like a Russell Brunson event or something, and you run to the back of the room, right? Because it's for sale now. Yeah. So that's what's happening. Well, people are getting in line and everyone's warning against or concerned about audits. They're checking now. So if you're going in and you've got a $200,000 credit, you can probably get it in 6 months, maybe a little bit less. You start to go over $500,000, certainly over $1 million. Now, hold on, because it's going to be 12 to 15 months. What's that money? What's that capital going to be worth? And what if you could deploy it earlier? Yeah. So what I'm helping folks do is I've got options for a full-on buyout or taking a loan against a portion of the credit to redeploy that capital.
Yeah. Like an advancement on it. Okay. So maybe some of the other strategies and things you may recommend for realtors, because I'll bring it up and I'll talk more about retirement. Kind of like that's kind of the direction. I don't know if you have anything specific that you can touch on that, because one of the biggest things that I'm always harping on is cash flow, right? And the name of the show, Agents Building Cash Flow. Like, how do we get more free cash flow on our investments or anything along those lines? Because as realtors, most of the time, brokers are not offering any kind of retirement plans. It's on us. We're going out. We're having to figure it out on our own. So any tips around planning or around retirement strategies that you may have?
I'll go in 2 different directions. First, advanced tax planning is not the same as just filing, right? So forensically, I don't claim to be the expert, but I leverage the experts and partners I have in this space where they're actually looking across 1,500 different parameters of federal, state, and local, and making sure that when taxes are filed, that corporations are set up in the right entity rather than just, hey, I thought the S Corp was right versus the LLC, and really squeezing that out. So that's a strategy why I say I bring on a partner for that, because the folks that have been doing that, they came from doing it for the ultra wealthy and now make that available to basically anybody that's revenuing over $150,000 a year that actually is paying taxes or not carrying losses forward. There's an opportunity there. And I know from the minimums, there's a minimum guarantee of a $7,500 a year savings. The average last year was about $35,000, and that's across like all spaces. So getting somebody that does what I call an AI tax strategy for advanced tax planning on board with your business. In fact, my partner was just talking to a group of realtors the other day about it. So it's a good space for that strategy. So that's the first part about on an ongoing basis, because we can't keep up, or I can't. I don't think most people can, between what happened with the Trump tax laws, what's changed since then, what's going to change next year. It's moving fast. So outside of a regular submitting a filing, advanced planning. So that frees you up on a regular basis on more cash flow. And then the other thing that I would say is, since you're as a business owner, maybe you've heard about a strategy for high net worth clients with premium financing and some sort of an insurance play. I don't know if that.
I was going to ask you about that. There's like I think a coined term, bulletproof wealth or bulletproof strategy. For Tom, I think I need to get him on here and talk to him about it. But anyway, what's your take on that?
So we have a service within our back office that, again, it's the owner was brilliant enough like 20 years ago to put a provisional patent on it, because there's some nuances to it. But it's the idea of leveraging the business to then go to a lending partner and create a much bigger account to fit into the right vehicle. So the way I explain it, it's like getting $25 for every one of your dollars you're going to put into the account. You keep it off of the investment roller coaster, which may be the market with this particular account. So you put a floor under it, but probably and most likely into some sort of an indexed insurance product. And then you're going to look at it anywhere from usually 10 is the sweet spot, but 5, 7, 10 plus years out, creating an account that by the time that you're ready to take that is going to be on average 200 to 400% more valuable than a traditional 401k. So it is a very smart strategy. It's not quote unquote a tax strategy. It is an exit and retirement strategy. And it's brilliant. And again, there's some nuances to it, but the whole idea is when you're not putting all your own capital up to invest in all your real estate, right? So if you can go ahead and get a funding partner for a retirement account, year one, would we rather start seeing an index gain on $50,000 or $1.5 million? And that's how you can bring forward the strategy to grow that faster and then have more of it when you're done. Because I don't know if you ever walk in the room and say, do you think taxes are going to be higher or lower in 10 years? What's the typical response? And how many people think taxes are going down over the next 10 years, right?
Yeah. All right. I got to ask you then. Okay. Let's dive into this because I don't know if it's the same thing, but you high leveled that, very high level. Okay. So break that strategy down for me. I'm coming to you again. Just talk to me as though I'm a guy trying to figure this out. How do I start that strategy? I got 50 grand. I want to put it to work.
Well, so we would do a needs analysis, and then we would be looking at leveraging the business as the asset. And there's a couple low bars of entry and do that analysis first. But what we're going to leverage, what's going to happen is the loan is actually going to be made to the business.
Sure.
So then the value transfer is going to be to the owner or key partners within there at a certain time in the future. Now, when you're talking to your accountant about it and you're looking at this is likely going to be a general purpose business loan, it can be categorized as such. So there's other write-off benefits that are going to come right out of the gate from that. And that's, it is high level. There are some other nuances, but it really is about having the partners in place to be able to do that. What your needs would determine really what car we would drive off the lot when it comes to the insurance product. Okay. So it's not a particular company or carrier. Going through that needs analysis up front we'd come forward with a couple different options that would fit into that strategy for you. Okay.
But again, let's just talk actually how the mechanics of it work, because you're saying, okay, you're going to lend money to the company, let's, for easy numbers, it's $1 million loan, right? Is that rational, reasonable, or is that high or low?
That could be accurate. Yep.
Okay. So it's $1 million loan. And then what is, I'm borrowing that from who?
You're borrowing it from the lending partner that we have involved in it.
So whoever the lender is and whatever that rate is. So is the play the fact that I'm putting that money to work and it's going to yield a higher return or rate than I'm borrowing it at? Is that essentially it?
Yes, that is the play, and that you're putting it someplace that has a floor under it into an indexed account usually. But it's riding on the chassis of insurance as opposed to a qualified plan. So you're not trading it in the market. You don't have some of those other kind of restrictions that are around that. And then when you do go, again, you're going to, if you were just going to go get any cash value insurance product, you're going to be looking at giving it probably 10 years to when you really want to utilize that and have that utility. So same idea is there. You wouldn't take it all necessarily year one. You can spread it out. The difference here is that you can spread it out over let's say a 10 year. And the way the lender can work this with you is they can actually escrow that. So that's part of the nuances too, because some of the problems with this in past times is if the bank was gone and stepped out of the picture, then how are you going to keep funding the policy? So we put that in place to make sure that it keeps getting funded. Okay.
But again, all right. Sorry, I like you talk to me like I'm a child. So I'm going to ask the dumb questions, and that way.
And I'm not afraid to tell you that I didn't design this as an architect. What I've got is I've got the back office strategy with the guys that will hammer it home.
Got it. Yeah, that's fine. You still understand it better than I do, and anyone listening. So again, I get that $1 million, and because you use some general terms in there, and I just want to make sure that I'm clear on it. If is that $1 million going into an investment vehicle, or is that $1 million essentially an insurance policy?
Yeah,
because
yeah. We'll call it
the way, the way I've heard the way I've heard guys do it is they take out a life insurance policy and they're paying into this. And so maybe if they have a large chunk of cash day one, they're putting that money into an insurance policy, life insurance policy, and it will mature in like 10 years, kind of like the same strategy you're talking about. And it will be worth so much more, but at the same time, they're paying premiums all along the way, right? They're paying the premium, so they're really, it's kind of like a savings plan, and they're borrowing against that savings plan in order to go out and buy assets. So they become the bank essentially, right? Mm-hmm. Is this kind of the same strategy in this?
It is. The key in there is the premium financing. So with the financing structure, it allows you to accelerate that. So instead of, yes, you're going to continue to put some of your own, let's say you were going to use that 50,000 number, you're going to put your own money in there, but the lender is going to put that larger portion in. And so you get to grow the account earlier and much faster. And then you have instead of you obviously have an insurance aspect to it. So you have that protection from day one, should something happen. So you're not left, it's going to cover more than just it'll be a face value day one as an insurance product, the same you would sell it against or for any other reason to have insurance.
Yeah.
And any other utilities that you have are typically in there. There can be some living benefits and some long-term care, like later down the road. And of course, the cash value that you're borrowing from yourself in the future, since you've already paid the taxes on it, that's the other beauty of it. You don't have the oversight. You're not going to get taxed on it. And you don't have the rules for distribution, and you don't have the rules for where it can go and that kind of government oversight since you're borrowing it from yourself.
Got it. Okay. Yeah. I mean, there are a lot of guys I know they're doing very well. Like that's a strategy it's one of the strategies that they use. So,
and what I do is I look to get with other financial professionals and make this a tool in their toolbox as well, because it's not even so much that I need to be an agent of record on this. I'm like, anybody that's working with business owners that can qualify and leverage their business to do this should look at it as a potential strategy. It's not always going to be the right fit, but the key things again are getting that larger sum invested faster and earlier, keeping a floor under it. So you know when the drops happen, sure, you've got some money over here invested in riskier plays, and you've got your other whatever else you're investing in with your properties, but there's a floor under that particular money. So the worst it's going to do in a year is zero. And then hopefully we're picking back up on that index and then taking it tax-free in retirement. So that's kind of how I summarize it in those three key areas.
Yeah. Okay. Awesome. All right. So, again, getting back into, I guess, some of the real estate side of things, I see on here that you guys have success, commercial real estate and that sort of thing. So are you particularly investing? Like what's your background, I guess, on investments? Yeah. Do you own any real estate as investment?
I don't currently have any real estate investments or holdings. And when we moved, we did some full-time travel when we were out west. And then when we came back to the East Coast, we were just getting like set up and reestablished. What I am looking for in the near term future is I've got relationships with friends with sound money investments. That's where I'm starting to look at some of that utility and being able to get into exchange where the partners that are in that network can spend that gold and silver with one another. So that's one of my definite longer term strategies, as well as finding there are some companies out there that have some asset-backed type crypto products and things. So there's in either a simple one would be in oil, for example. They're launching products that have oil-backed real assets and then a crypto element to it. So those are the two things that I'm most interested in going forward with investing. I wouldn't say that I would never get into property. I'm interested to learn more, especially I don't know that space really well at all, but I know there's potentially some things going on in the tax lien space that I could probably get educated on.
Yeah. I mean, that's been around for a while. The tax lien play is really fairly simple, but if you go any county, it's a super easy list to find, but any county that people haven't paid their taxes, you'll start getting hammered with letters from everyone around the country, like,
Right.
I can help you. And then essentially you're just loaning money to pay their taxes off. And if they don't pay, then you have the right to the property in a second lien position or first lien if they don't have an underlying note. So you become a bank essentially for a very small amount of money. And if they don't pay, you can just foreclose. So it's kind of a brutal space. Could be you foreclosing for like $2,000 on a $200,000 house or something. But it's also competitive. But yeah, if you ever want to talk about that, man, I'm happy to chat.
Yeah, I'd like to talk. I want to talk more about it in like a land capacity. That's interesting to me at some point, and kind of central space in Florida. But
yeah, I was going to ask, where are you located?
Yeah, I'm in Sarasota on the it's kind of sort of mid-south west coast under Tampa.
Yeah, you a horse guy?
I'm not. I know that like Mayaka and all the parks that are close by are gorgeous, but
I just didn't know. I've heard, right? It's like a horse community. There's a lot of racing going on there. Am I thinking of the right place?
I'm not sure if there is anything north. I mean, Sarasota, I like it. It's still kind of sleepy in comparison to going up into Tampa, St. Pete, and certainly the west coast of Florida is entirely different from east and southeast. Like it's like I say if they draw the lines and it's ever a secession, Miami probably won't be part of the United State of Florida, but we like it quite a bit here.
No, it's nice. It's nice. I was born out in Jacksonville, so yeah, I know that area somewhat. And yeah, you're right. The West Coast is definitely different. It is quieter, and at least my take. I don't know. Maybe I'm wrong, but
it's been picking up. Obviously, I mean, I came here because we like my wife and I liked this space like 20 years ago. But I have a great aunt that was my grandmother's sister that lives just north of us. So we wanted to get back with purpose, closer to family. And we were spoiled because we were in Southern California. So I was born in the Northeast, but I wasn't going back to, shoveling any snow. So, drive up and visit family, but we're good down here.
Yeah, for sure. Yeah. So you were one of the many that exited California. How long ago did you do that?
Yeah, we left in October of 20. Basically, when I tell people, I mean, I spent a lot of time doing business development in California and other states there in a different business capacity. So we traveled around for almost 3 years in an RV, got to see a lot of different states and country. And California is quite amazing and dramatically different as you go up and down it. But and San Diego is where we were at. We sold the RV and we were living in San Diego. And everybody says, I love San Diego. I said, yeah, it is. It's phenomenal when they let you out of the house. Yeah. What they came out with, what they showed themselves, like what was going on there, it was like, we were. And our family they're not getting any younger and they're not moving west. Right. So that was like all the writings on the wall to come back east.
Yeah. Nice. Well, yeah. The person I interviewed just a minute ago was, she's out in California. She's in LA. And I was asking her about that. I was like, man, what is it like, owning property out there and just the difference because in Texas where I am and in Florida, it's very landlord friendly. So much different atmosphere. But all right, well, look, let's chat a little bit more on the crypto side. One thing that I heard this the other day, a friend of mine, he's actually in oil, and what their play is, they are actually using the excess, like the burn off and the energy that's wasted, when they flare. I don't know if you're familiar. So, and they're using that to actually power crypto mining. And I was like, oh, that's a crazy play, right?
Good
Something
play,
you just wouldn't think about, but. So they're doing that, and they have, I don't know if he has a fund stood up for that to raise capital, or if they even need that. I think it may have just been something that he was into. So yeah, I don't know what crypto play you're looking at that's oil based, but
yeah, they're using that asset to back it up. Not probably quite the same way. The other thing, and I've got a friend who's been speaking at events for years, so I get into his mastermind group, and I'm learning, what he's talking about and what's going to have utility and what's going to have security. So that's the other big thing I think that people need to start looking at a little bit more. Because I mean, we know, okay, they're going to move a certain amount of our spending to a CBDC. I mean, that's where they're moving. But what else can you be in that's not completely trackable and have utility with? So that's another, I think, important space for everyone to look at and learn some about, because even Bitcoin's completely trackable and completely controllable. We just saw that with up in Canada, right? With everything that was going on there.
No, I don't know. What are you
Oh,
talking
yeah.
about?
Well, they turned off. I mean, they tracked accounts, and when they were doing the truck driver protests and everything, having there was trackable movement through that space, because it is, if you're in that security space, or I listened to my friend again, Terry, talk about it, it's completely exposed. And then you get to a coin like Monero that was supposed to solve some of the problems with trackable. And it is harder to track and trace your moves there. But there's one called Pirate Chain, and it's still like a community project. Apparently, it's hundreds of times, maybe thousands of times more secure than Monero. So when you're entering more into those spaces, that's something that's on my mind too for futures, because we don't all want everything that we're doing tracked and traced, right, all the time. So certain portion of that's what those kind of things interest me.
So what did Canada do? Again, truck drivers were using crypto. They had Bitcoin, and then Canada somehow took their crypto accounts.
It was the supporters of the drivers, and people were turning in donations. Both traditionally, people got bank accounts froze up. People got contacted that were donating on platforms, and I think certain coin platforms got shut down or grasped too. So there was a lot. They really pushed back hard against the support going into that protest.
Wow. Okay. Yeah. I didn't know. Yeah. That the whole point of Bitcoin, I thought, was that it's visible, but you don't know who, you don't tie it to someone specifically.
You definitely do now.
Yeah.
And then in many of the spaces, it's also about, like, as secure as the coin is, and then there's the on ramps and off ramps, and if people can monitor it, that's how it all kind of wraps together. Yeah. I can, if you want to get detailed into that, I'll make a connection for you, and you could spend because my buddy Terry could talk for hours and really get into the nitty gritty details of,
I mean, maybe, I don't know. It's one of those things that it's like, I could go down the rabbit hole. And a guy that I brought on, he's a buddy of mine, and he's like a cryptographer. The guy was in military intelligence, and we're just sitting there talking like a rocket scientist. I was like, you are definitely smarter than than me. Just tell me, kind of what to do. It's easier for me to I guess take that sort of advice on his front. Than knowing all of it myself, I guess. You know what I mean?
Agreed. That's why I leverage his. It's amazing that somebody can spend 20 years invested in something, and you can learn a lot about what they know in 2.5 hours, right?
Yeah, exactly.
But a good friend of mine reminded me recently, he's in the funding space, that we really can't, if you're going to drive and be an expert at something narrow, you can't shirk that 10,000 hour rule. So you can tell when somebody has invested the time, right? Yeah,
for sure. Exactly. All right. So I guess on the investing side and in that world with your clients, I mean, do you do any kind of like strategies once they save this money, and once they do, like, are you saying, you guys could put it here? This is a great type. Do you get involved in that world at all?
I do. I make partner introductions for that space. Yeah, that's what I'll do. So my goal would be to get that, aside from the accelerated retirement program we talked about with premium financing. That's one piece of it. But outside of that, my goal is to make the business more profitable, and then have them have that flexibility, and then introduce them to the right people to help with that.
Yeah. Nice. Awesome. We're proud to be sponsored by Ridgeline Investment Group. Ridgeline has a track record of transacting more than $53 million in assets throughout Texas. Ridgeline's currently looking to acquire 100 to 200 unit Class B multifamily communities between 5 and 20 million in San Antonio, Temple, Waco, Tyler, and other Texas secondary markets. To learn more about Ridgeline Investment Group, visit www.ridgelineig.com. So I guess with your line of sight in talking to some of these companies from an investment point of view, because I've looked at franchises, I've looked at different, businesses that I could actually buy and acquire. Car wash is a good example. It's a cash flowing business. It's a cash business, or it used to be traditionally. And now it's more like credit card and that sort of thing. But like, what are some businesses that are high cash businesses that you have seen or worked with, or any business that you've seen that's like kind of booming or growing right now?
Well, I've recently took on a line and an opportunity in the B2B space that is hugely disruptive. And there's a lot of, so I can say it this way, there's a lot of these plans out there that reside in what I would call the cafeteria 125 space, where like Aflac kind of positioned itself as, employee funded extra benefits. And this kind of breaks down the barrier for me of the number of employees, because like unlike ERC where you had a cap on number of employees, this is the most exciting thing I've seen in a B2B capacity. If somebody has that kind of connectivity, but what they were doing was they were already putting this wellness in place, because what's happened is people are more stressed out than ever. So we know that they found out that if people have access to care and cash, that there's less issues with claims when it comes to workers' compensation, as an example. So there's a group that came with 18 carriers in the work comp space, and they're bringing this whole thing together to the table that says if you implement the wellness program, which gives you a tax advantage. Now, the only low barrier to entry here is if you're paying $10,000 or more in workers' comp a year. So it ends up being about companies at 10 or more, because it's on average $1,000 a year. If you install the wellness program, we know that's going to improve the number of claims. Plus, we brought the 18 carriers to the table with sharp pencils, and no one's taking commission. It's going to be straight, so there's no commission in there. So that's emerged as the most disruptive thing that I've seen in quite a time. And I'm working with folks in any B2B capacity that need a door opener, because it gets them in to be able to talk about whatever else they're doing business wise. But it's very front loaded on year one. So it's a massive cash flow year one business.
So is there an opportunity there for someone to invest in that business, or is that like, it's just a good business that you're seeing that's coming online?
It's just, they just launched it to the marketplace about 3 weeks ago. So that's why I just saw it emerge and come online, because it's so disruptive. So it wouldn't be like a buy so much as having the resources to refer. So I talk to people all day long. And then when I tell somebody about this, their wheels get turning about, oh, I know this one or that one or this, or a friend of mine in the insurance space, I was telling him, and it brought a friend of his to mind, because one of the things the employees get out of the wellness is a guaranteed issue $100,000 cash value life insurance policy that's portable when they leave. So that got him thinking about, well, I've got a particular friend in a particular company that could benefit from that, because he's a high risk guy, and it's going to be hard to insure him when he does leave. So if we could get that into his company. So I bring it up in sort of that spirit of it's something that's going to help any business. And there's only 4 states. Actually, Texas is optional for workers' comp, but still, like, apparently 80% of businesses are covered there. And there's only 4 other states that are monopolistic that sell the workers' comp to the business. Otherwise, everybody's got to have it. And so it's become it's like even people that work in the space and sell it, I've heard and learned really fast. It's like, it's kind of this necessary evil. I got to do it. And then there's, like any business or industry, there's the potential to not do well by the company and put everybody at the highest rate, kind of thing. So there's a lot of opportunity in there.
Yeah, that's awesome. That's interesting. Well, hey man, I appreciate you jumping on. It was good catching up, good chatting. You like have your hands. To me, it's awesome because you get to see so many different businesses, and that to me is fascinating. Where you're seeing kind of behind the veil on a bunch of different businesses, so you can kind of put the pieces together. So definitely appreciate you jumping on and sharing your knowledge with us and chatting with us about some of the strategies that we can use. Just before we go, man, what is I usually ask a couple questions, so like what's your favorite pastime not related to work?
I love the nature that's around us here. So my wife and I like to go and explore. That's probably one of the biggest ones. There's nothing more relaxing, especially I think she likes it even more than me. We go down by the water and watch the wildlife. There's plenty of it here.
Yeah, no, it's nice, man. It really is. That area I love that area again, growing up around there. So, and then what's something good that's happened to you or the family in recent memory? Just like to end on a positive note here.
Yeah, for sure. Well, my dad's in a much better spot where he moved to in Daytona Beach. So really, happy for him in that respect. He was down in he was in Deerfield Beach and he loved it there, but then he moved to West Palm for about 8 or 10 years and he didn't get to go walk on the beach anymore. So now he's got Daytona Beach, and they had to rebuild it a little bit after last year's storms. But that's one of the happy things I think about is he gets to go out and walk on his beach now every day again, because he gets to do that. And we're and then from even closer localized perspective, my wife has been doing, she's a freelance editor. So she's really started to pick up some projects that she's enjoying, and want to make sure that she can do more of that. And stuff.
That's awesome. Yeah, that is definitely, I don't know, man. You were talking about going RVing across the West Coast. That sounds pretty awesome that you guys were able to do that and get to see so many things. We're
going to do it again. I tell everybody that it was interesting growing up in the Northeast, moving. We lived in southern Indiana for 8.5 years. We went all the way west. But when we got into the RVs, there's a whole different community feel. And even before the COVID response, there was a lot of people that were out full time. Some of them had locations to go back to. Some were just out full time in different capacities and industries, like traveling nurses or line operators, energy people. It's a really neat community feel, because when you come into an RV park, it really is like everybody's like, oh, you're here, and they're trying to help out. Whereas you can move into a neighborhood and not talk to half the neighborhood for 5 years, right?
Yeah. So were you delivering? Because my grandma used to do that. She would deliver. It was part of their business in their retirement. They wanted to travel and go see everything, and so they would get a brand new like coach motorhome deal and take it across country. And so they got to enjoy this like brand new motorhome and see the country and drive and get paid for it.
No, I was setting up business relationships at a different business for a manufactured water treatment product. So it was plumbing wholesalers. Were some of our biggest clients. So we would travel around and start those relationships, educate, and get out into the field there, and then move, for another few months and kind of move around there, because we had several states I was doing that in out west. And so it was a lot, because it was work and life and everything, and trying to make sure you see enough stuff and slow down enough. So that's on the radar too, as far as near-term purchase. I'm saying within the next 6 months, that's our goal, is we're going to go with the C class with a slide, a little bit smaller, because we're going to keep home base, because we were just out full time. Ironically, put some stuff in storage and went out full time. But the next time we do it, we're going to do it a little bit more relaxed and not quite as everything in one place, and a little smaller. But I recommend it. It's a good time.
Yeah, for sure. Well, awesome, man. Good catching up, good chatting. I appreciate you jumping on. And when you're on the road, man, send me some pics.
Absolutely. That's my one regret, is I didn't document the whole thing. But I still get Google Phone sends me all the pictures, from after 4 years ago. Look where we were.
Yeah, exactly.
Good stuff. Thanks, Randall. Appreciate the opportunity.
Right. Eric, it's great chatting. Have a good one.
You too.
Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.